Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. A lot to discuss. We just got the jobs report out. Again, that's the non-farm payrolls report coming in at 151,000 jobs. What are the markets doing? We're going to take a look at that in just 1 second. But needless to say, the market's coming off of a huge drop yesterday, a big drop in the last 6 to 10 trading days, and things are looking dire. But the question is, where are the technical support? So let's follow me over here to the big board. Let's take a look at the data and then where the markets are trading. So payrolls came out at 151,000. That was compared to 159,000 expected. So it was slightly weaker, but in general, you could see the S&P initially really surged to the upside here before coming in. So why did that happen? Why did we initially surge to the upside? Now we're basically back to the flat line. The answer is pretty simple. This number is not horrible. The markets were holding their breath after the ADP jobs data on Wednesday that this was going to be like 75K or 50K. It came in about in line with expectations. The markets initially saw a kind of breath of fresh air there before coming back in. Now, why are the markets coming back in? Two things. Number one, you have a situation where they revised last month down to 125,000 from about 143,000 jobs that had been reported. So there was a revision last month. There's no doubt about it. The economy is weakening by these numbers. All right, revising last month down, this number here. The question is, does this number then get revised down next month as well? All of these factors definitely in play here. So we'll have to continue to monitor that. So again, these are the key factors here as we get into markets. Now, we did see the unemployment rate uptick to 4.1%. That was largely expected, though, so nothing new to report on that front. All right, you can see again the S&P initially popped to the upside, has now come back into the flat line. I would say this is another major factor, and this could be the biggest factor out there that I think most investors aren't recognizing. So everyone looks at the economic data, but the real catalyst here, or the negative factor, is the Trump flip-flopping. I'm telling you guys right now, if there's one thing I've learned in 26 years of trading the market, is the market wants certainty. So whether tariffs are on, okay, then tariffs are on, let them be on. All right, or tariffs not on, let them not be on. Give definitive answers and have that kind of structure that the market knows what to base investment decisions on. When you go from one day saying, okay, tariffs on 25% across the board on all Canadian Mexican goods, then you say, okay, well, not autos, and then the next day it's, okay, well, pretty much no tariffs for another month. That's creating uncertainty, and markets can't, big institutions, we're talking big money here, they can't make investment decisions not knowing the reality of the situation. And that uncertainty, what ends up happening is that means the big players can't invest and buy stocks without firm basis for their profit models or their investment models. All right, so let's get into the next factor here. Let's take a look at the daily chart here. I did put in my next technical level of support. You can see right now we're trading basically flat in the morning session right here after that initial pop on the jobs report. And again, just to go over it, we have this level coming into play here. This is right here around 564 to 565, and that comes from this level over here, right? So right in this vicinity, you can see, excuse me, just across the board from this top to this low, that level now stands as a major technical level. So again, we're going to call it 564 to 565 on the SPY. That is the next level that I will be watching today as I'm trading this market with the Apex Live Day Trading Room. That should be major technical support if we dump into it. Now, is it possible we could get a little reprieve? It's possible, but just the mere aspect that the markets have kind of come back in here, it makes it a little wishy-washy, right? You had a chance for the jobs report to really be the catalyst following Broadcom's earnings, and we know Broadcom came out with earnings yesterday after the bell that were actually good, so that calms things in the semiconductor sector. Now the jobs report, okay, maybe, and again, we are upticking just a little bit here, so we'll have to follow and see. But ultimately, I know my downside level, which is very, very important. Next up, taking a look at the QQQ. All right, so the Qs, if we go to the NASDAQ 100, you can see same thing, popped initially on the back of the jobs report, then has come back in, is getting a little bit of an uptick right here. And ultimately, I see these trend lines down here, folks. And what are we looking at right here? This is this level. So what is this level? This is that longer term trend line from January of 2023 through November 2023 through August of 2024. And that is a major level on technology with this level as well, right through here. So we could go a little bit lower, 485, but 485 on the Qs, which is about $3 lower from the close from yesterday, that is going to be a big level of kind of interest to me in terms of whether or not that holds. Now, AVGO is doing its job to try to save things. Now, I did go into earnings here, and we'll talk a little bit about this. If we come over here to the big board, we can see that Broadcom is trading up at 196 right here. So again, it's having a good bounce on earnings. The beauty of this was that the chart kind of guided us to expect a bounce. Now, you never know on earnings. It could go either way. But ultimately, what do we have here? We have the gap fill right here, and Broadcom was trading up here. It fell going into earnings into gap fill. In addition, there's this longer term trend line through these lows, right? And it comes right into that zone as well. So going into earnings, the idea was, okay, what was the probability here? Was there favoring a bounce? Or was it favoring a fall? It falls sharply into earnings, which means that expectations for earnings were being lowered, right? Lowered, because we were seeing a lot of these stocks that were reporting earnings fall to the downside, and comes right into technical support. The stock bounces right here. Now, is there a trade today? Not really, because ultimately it's having a bounce, but it's only back to this level after this type of fall. So it's not like I'm going to be looking to short this on an intraday basis, at least not yet. Maybe if it gets north of 215 or so, I might be interested. But the point being, again, gap fill, upsloping trend line, price fell right into there yesterday, gets a bounce on earnings. All right, now there is another stock that's getting beaten down today, HPE, which is Hewlett-Packard Enterprises. This, again, is another one that's kind of in the same zone as AI, more data centers, though. And you can see right here, look at the drop on earnings, massive drop of about 20%. It's come a little bit off those lows. But ultimately, again, this is where a drop like this and then the gap down on earnings down to about $15, this is where I start to get interested if it falls into support. My first level, 1370 right here, guys. 1370 on HPE. By the way, pre-market, HPE was all the way down to 1408 or so. So it wasn't that far away if it falls back into that level. But notice this flat bottom right here. That's telling me there should be some technical support. And by the way, this is taking us back to 2023 levels. And that's the next thing I want to discuss here, right? So as we get into things, what we have to understand is that stocks correct using the elevator, right? So they generally take the stairs up, and when they collapse, they take the elevator down. Corrections are always faster than the moves up, generally because panic and fear is a much more pervasive emotion than greed. Even though greed is powerful, fear is more powerful. All right, so looking at the charts, there's some charts here that are actually starting to get my attention. Take a look at CEG. This is one of those energy players utilities that had that incredible run, right? And we're talking about on February 19th, this stock was around $330. It is currently trading at 208. But the reason this is getting my attention is you're now starting to get into gap fill levels, right? So we're now starting to get into technical levels of support where things are starting to get intriguing. For instance, look at this. They have a trend line here upsloping through this low and this low, and it's starting to come in. Now, listen, there's no guarantees. We don't know if it will hold support here, but after dropping from 330 to 210 to 208 now, the odds start to favor some sort of bounce. Oklo, same thing, OKLO, one of the high flyers here in early January, running to almost $60 a share, has now cratered to $25.75, but it is now starting to get into technical levels of support. So my point of bringing these to your attention is that while fear is gripping most investors, a good swing trader starts to potentially get interested at some of these levels. Another example would be Tesla. Tesla here, 259 right now. It's getting close to gap fill at around 250 to 252. And again, this would be a full retrace of the election run on Tesla here. That should yield some sort of technical support for a technical bounce. Now, is this a long-term buying opportunity on Tesla? Probably not. But is it potentially a starter place for a swing trade? I actually am looking at it myself to potentially pick up as a swing trade. All right, another stock that I'm keeping an eye on here is Rigetti. So Rigetti's kind of been out of the news for a while. I loved the price action yesterday, green on a red day, and watching to see if it can break out here. It is trading flat to higher this morning. And again, keep an eye on Rigetti and these supercomputing stocks. They have been kind of grinding lower, but trying to break out in the near term. Another stock getting trounced this morning is Lunar, which is Intuitive Machines. They had a landing on the moon yesterday that did not go according to plans. I guess the lunar lander kind of went on its side. I don't really know the latest updates. The stock is getting crushed, though. It was down something like 20% yesterday, down about 30+% today. Now, again, for me, I start to say, okay, is there a trading opportunity here? Here's where it closed yesterday, around $11.17, trading at 730 or so. And I start to look at these levels down here. There's a big level here at 615 with a gap fill at around 550 right there. So you start getting into this area. See this sideways consolidation right here? That should work as a technical level of support. And again, just to put this in perspective, 730 down to 615 sounds like a long way, but it actually got as low as 670 just, an hour and a half ago in the pre-market. So nothing says it can't flush down there, but I will be eyeing that as an opportunity. All right, let's jump over to Bitcoin here. Let's take a look at Bitcoin on the big board. We'll jump over to it. So if we look at Bitcoin here, guys, what do we have? We have Bitcoin still respecting its 92,000 resistance right here. It's been all over the map. Now, we did hear from Trump and the administration that there is a Bitcoin reserve that has been created. The caveat here, and this is something I warned about months ago when this was being talked up, I said there's no way the U.S. government can actually start buying Bitcoin because the signal it sends about the U.S. dollar's dominance would literally potentially be the end to the dollar reserve currency. And the U.S. does not want that. So I said what they would do is they would say, okay, well, anything that we've seized in terms of Bitcoin, we're going to put that in the reserve. This way, they're not actively buying Bitcoin. They're just saying, hey, listen, we seized X amount. I think it's something like 17 billion worth or 15 billion worth of Bitcoin. We're going to put it in our reserve. And so that's exactly what they did. Now, again, that's not as good as what Bitcoiners would want, but that's the reality of it. Now, on a technical basis, it just continues to be as simple as it is, right? You have resistance here. To get above resistance and establish itself, it must confirm above 92. Closed above here, never confirmed, came right back in. And then as long as you're below 92, the market for Bitcoin is vulnerable to 73 to 75,000, all right? So again, nothing much has changed there, but we see a lot of chop action on Bitcoin lately. All right, next up, let's take a look at gold on the back of this jobs report. Almost no movement on gold here as we are just chopping sideways. The only thing I would mention here is that you could be starting to make a little bullish consolidation here off of this up move, so we have to be open to that it could set the tone, and we'll watch gold today in the next couple trading days. Does it make another attempt to take out this short-term high and push up to the 3,000 plus resistance right up here? Taking a look at silver as well. Silver is coming in a little bit. And again, silver's just stuck between the downsloping line and the support line here. So again, we need a break here to send it up to this level, or a break here to send it down into this technical support there. Now, oil, guys, it came into my major 65 to 66 resistance, and I said, okay, guys, we should be due for a technical bounce on oil. Sure enough, we are getting that bounce today. Again, sanctions being announced on, I think it's Iran, in terms of some new sanctions, something like that. Notice how the technicals align with that. It's really cool how that stuff just somehow the charts know ahead of time, whether it's inside information or whatnot, I don't know, but ultimately a little bit of a bounce. Now, my expectation continues to be net negative, meaning we might bounce here, maybe even up here, but eventually I do think we have our next leg down in oil. And lastly, natural gas, beautiful fall. Notice how a lot of people would have been kind of whipped out of this trade thinking it broke out up here. Instead, it closed above, never confirmed. and then the rug pull begins as price comes in. I remain still short on nat gas, basically around the break even at this point, but I continue to favor a move to the downside. One level I'll be watching very closely for nat gas to break would be kind of this upsloping level. If it can get through this line, it has a lot of potential downside. So this will be that first area of support right around $3.99, $4 on nat gas. A break below that could really do some serious damage to the downside if it gets there. All right, guys. So listen, we have the jobs report out today. Markets, again, are kind of trying to figure it out whether or not it likes it or not. Right now, again, markets are trading flattish, down slightly, up slightly, down slightly, back and forth. We have obviously some stocks that are nearing or at support, but obviously risks are high. The market, to me, is now more nervous about the kind of the flip-flopping and what to trust out of the government than anything else, and uncertainty. And again, I've learned this over 26 years of trading. Uncertainty is worse than negative policy, right? So you have to look at it like that. The market wants and investors want frameworks that they can decide on what to buy and what to sell. And when things keep going back and forth, what do they eventually do? They say, hey, listen, if we can't understand what's going to happen, then we're just going to sit out of the market and figure it out later on. And that can be a net negative overall as money just evaporates in terms of buyers. All right, guys, I'm going to head over to the trading room. We're going to get started on today's action. Thank you so much for joining me on this Friday morning in the game plan, and thank you for your support. Take care.